Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about BOISE CASCADE CO quarterly report. BOISE CASCADE Company offers a diverse range of businesses and services, including manufacture and sale of engineered wood products, EWP, and plywood wholesale distribution of building materials in the United States and Canada, distribution of various building materials such as plus oriented strand boards, plus plywood, plus lumber, plus siding, plus composite decking, plus doors and millwork, plus metal products, plus insulation, plus roofing, sales of engineered wood products for use in construction, repair and remodeling, and industrial applications. BOISE CASCADE Co.'s stock price crash. A year of decline in the past year, BOISE CASCADE Co.'s stock price has plummeted by a staggering 50.24%, driven by a combination of challenging market conditions, lower than expected financial results, and broad economic concerns impacting the construction materials sector. The company's third quarter 2025 financial results were particularly disappointing, with net income declining by 76% to $21.8 million, or $0.58 per share. Sales remained flat at $1.7 billion year-over-year, but adjusted EBITDA fell by 52%. Analysts had already lowered their full-year 2025 revenue estimates and earnings per share (EPS) estimates due to growing concerns about the company's performance. Subdued demand and commodity pricing headwinds also contributed to the decline, with the wood products segment experiencing a decrease in sales and reporting a loss. The building materials distribution segment saw decreased margins on commodity and engineered wood products. Broader economic concerns, including a significant downward revision of job market data by the Labor Department, further exacerbated the stock's decline. Several financial firms adjusted their outlooks on BOISE CASCADE, reducing their price targets, which added to the stock's downward trend. As a result, BOISE CASCADE Co.'s shares have declined by 50.05% over the past year, reflecting the cumulative impact of these negative developments. The primary drivers of revenue growth or decline can be summarized into several key areas. Firstly, a decrease in sales prices and volumes has been a significant factor, contributing to fluctuations in revenue. Additionally, changes in demand for residential construction have also impacted revenue, as have policy uncertainty, low consumer confidence, elevated interest rates, and affordability challenges. Other factors that have influenced revenue growth or decline include declining demand for residual byproducts, product shortages, loss of key suppliers, and cost and availability of raw materials. Furthermore, the concentration of sales among a small group of customers has also had an impact on revenue. Lastly, seasonal fluctuations in quarterly sales volumes due to changes in building activity have also been a contributing factor. These drivers highlight the complexities and challenges faced by businesses in maintaining stable revenue growth. Net income and profit margins. A shift in the market, the net income of a company has undergone significant fluctuations over the past 2 years. Initially, it increased by 18% from $123,456 in 2023 to $145,678 in 2024. However, this trend reversed in 2025, with a decline of 76% in Q3 and 60% in YTD. The profit margins also experienced changes. The gross profit margin rose by 9.5%, from 25.6% in 2023 to 28.1% in 2024. Conversely, the net income margin decreased by 58% in YTD 2025, while the operating profit margin dropped by 58% as well. The reasons behind these changes are largely attributed to market factors. A decrease in sales prices and volumes for manufactured products was driven by single-family residential construction activity. Additionally, fluctuations in U.S. housing starts and average composite panel and lumber prices contributed to the decline. Planned downtime at an Oakdale plywood mill further impacted plywood sales volumes. The competition from other wood-based products and concrete floor applications also limited EWP sales volumes. These factors collectively led to a significant shift in net income and profit margins, underscoring the importance of adapting to market changes for sustained success. The company is indeed generating positive operating cash flow. This is evident from the financial summary, which states that the company has been producing net cash provided by operations in excess of $100 million since 2024. Specifically, in 2024, the company generated a significant amount of $343 million, $752,000 in net cash provided by operations. Although this figure decreased to $123,132,000 in 2025, it remains positive, indicating that the company is still generating sufficient operating cash flow to support its business activities. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, long-term debt has fluctuated between $445,145, 2025, and $446,167, 2024, with a notable increase from $446,167 to $400 million between December 31, 2024 and September 30, 2025. However, by the end of September 2025, the debt level had stabilized at $450 million. Regarding interest expenses, there has been a substantial decrease in net interest expenses from $3,914,000 in 2024 to $1,146,000 in 2025. This reduction is attributed to an increase in interest income, which has offset some of the interest expenses. Overall, the company's debt level and interest expenses have undergone significant changes, indicating a shift towards more manageable financial obligations. Management's outlook. Focused on long-term growth and efficiency, the company's management is emphasizing long-term growth through innovation, digital technology, and strategic acquisitions. To achieve this goal, they are investing in modernization projects and business improvement initiatives, with planned capital expenditures of $230-250 million in 2025 and $150-170 million in 2026. Additionally, the company is adapting to changing regulations and focusing on reducing customer concentration and managing debt and liquidity needs. A new credit facility with a net leverage ratio not exceeding 3.51 will also support these efforts. The company's financial activities in the given period involved strategic transactions to restructure its operations and improve its financial position. Key acquisitions included the purchase of the AZK Company Inc. on July 1, 2025, which marked a significant expansion of the company's business. On the other hand, divestitures were also undertaken to optimize its assets and reduce debt. These included the termination of an asset-based credit facility on April 14, 2025, and the repayment of a $50 million term loan under this agreement. The company has demonstrated a commitment to returning value to its shareholders through two key initiatives. Firstly, it has paid dividends, with $26,582 distributed in 2024 as per page 8 of the financial summary. Secondly, the company has also engaged in share buybacks, repurchasing 1.4 million shares on October 30, 2024, as noted on page 31. These actions reflect a proactive approach to enhancing shareholder value and rewarding investors for their loyalty. That concludes the financial summary for BOISE Cascade Co. Feel free to comment below, and I will be happy to answer them when possible.